Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 9th of June, 2021, and we're sitting here now about 5:45 in the afternoon. I'm out early because I'm going to go have dinner out tonight, and there's not a lot going on. I was making fun in the morning futures flash video when I came out and I said, "Do you hear this sound of?" And what I was meaning a vacuum cleaner taking out the volatility, and that's what I said, and that's pretty much what's been going on. There's a time where the market starts losing that. It's in between the CPI report tomorrow, the European Central Bank coming out. Then next week we're going to get more important data from our Fed. They'll be asked questions, and then the volatility can start coming back in. That doesn't mean that there's not volatility in certain areas. Those Reddit people are still after the meme stocks as they find new names all the time where they think there's a large open interest enough for them to cause damage, and they go after them as a herd. It's very hard to play that. But guess what? The guys that are short, they'll figure out other ways. They'll figure out with option strategies how to prepare and protect themselves. So it's a phenomena. I get it. But at the end of the day, the guys playing that game are generally pretty smart. And while we hear what they lose on stock, I wonder how they're doing on option strategies, because that's what options do. They can offer you, the moment you hear that you're game for it, they're going to step in and do certain things with options. As for what we're doing, well, you had a day today of what I'll call noise in the market. The Dow is the weakest. Then we broke back, as you know, in the S&P and others, but they held on. You're up, in fact, tonight. Gold and silver down a little bit. The dollar up against it closed up against the euro, and the euro down a little bit tonight. Bonds and notes, well, you're not breaking very much, and you cracked the 150 level in the 10-year note, and I still like what I am seeing here in the energies. They're not breaking very much, and they had a terrible, in my opinion, report out of the EIA. It showed too much of a build in distillates and in gasoline, but there was an answer for it because you went up almost 3 points in the refinery capacity. So the refineries are building the stocks for what they think is going to be an absolute record breaker on demand as U.S. people come out, they drive, they fly, they're going to use a lot of fuel. That's the guess. The S&P 500, you're still up 31 points for the week, okay? Up 0.75 percentage point. When you look at the action here, I think you'd agree, volatility has come out for the time being. That's why I made that noise, and I could see it. You still have higher lows, higher highs. The trend is up unless you take out 42.0575. The support in the market is under that number, which means if you take that out, you lose the uptrend, but there's support right under you at 41.89 practically, 88.25 we'll call it exactly. And I don't like when I see this. When I see this sideways action, I get nervous because markets tend to stay in these. They can stay in them a long time, and that means you call your psychiatrist. You're looking for reasons. Why doesn't it keep going up? Well, first off, the real resistance here, if you know how to work with window envelopes, is the window envelope in front of this, not the band itself. There are window envelopes. They're standard deviations from a moving average. And when you use them, you're getting another percentage point. Are they as reliable as Bollinger Bands? Not even close. But they do come into play, and that's what I watch them. So I understand where they're at. I look at the momentum. It's still embedded. So even if you were to drop down until this red line closes under 79, you know what I'm going to say? I'm still bullish. Close under 79, I won't be anymore. Until that, I'm looking for these markets to have bias, strength, and try to move higher. In the NASDAQ, same thing. As long as this is in play, I don't care that I have a lower low, higher high. I think the traders are now the pros that understand these techniques, are buying the market on the break. They'll be out if you close under 79, and they're looking for the upper Bollinger Band in this one. You haven't gotten up to the other numbers. I think that would be the band. The Dow, not the same at all. Not even close. Market came up and turned itself right back down. There is no trend. The market's got a higher high, lower low pattern. I don't see a darn thing to do in it and haven't. It got into overbought territory, whereas these gave you embedded readings, a complete difference in the look of the chart. Then I get to the Russell, same thing. But Russell said, hey buddies, I'm getting out. I'm a pro, I'm coming out. You got up to that upper Bollinger Band. I understand what that does the first time. Does that mean they've liquidated the whole position? No, I don't think so. I think they'll take money off the table and maybe apply it on breaks in the market until the red line's under 79. That could all happen tomorrow too. When you get these quiet markets, anything can give. We want to see the CPI number. Is it going to be a hot one that gets traders thinking, okay, the Fed's got to do something soon? Or is it going to come in a bit tamer and say, well, wait a minute, we had that surge, maybe it's not as red hot. We've seen that happening in China too. Although China, some of these numbers that they're getting are 13-year highs? Pretty strong numbers. In the VIX, you've got this pattern of lower low, higher high, and guess what? You have a reading over 21. The pros got out. That's what I think. Anyone that was selling this market basis this, I think they came out of the market on the close today, and they've called it a day. Losing the embedded reading often leads to a challenge of the 18-day average of closes. In the bond market, would I teach you to buy over an upper Bollinger Band? I don't think so. You're over it. I get it. Are we going to try to embed? Well, you can't count today. So you got to go back to Wednesday and the day before you weren't. So you just have an overbought market. I get it. And I'm going to repeat. That first challenge of 100-day in the Bollinger Band often gets met with a lot of resistance. We'll see if I'm right or wrong on that. I do realize it's over. I'm not blind, but I'm not picking a top. That's where I think you come out if you were long. That's a big difference between coming out of longs and trying to go short. That's not what I'm saying and not even implying. Overbought again in the 10-year. I like that it's given a run. It certainly caught a lot of people that thought interest rates were just going to keep shooting up. They haven't, all since the jobs data report. Dollar index is sort of in the middle of no man's land. And notice how the Bollinger Bands are shrinking in and momentum has just gone sideways. I want to wait for the next set of signals. Why would you do anything in front of the European Central Bank tomorrow? So if you were sitting next to me, that elbow would go like that, and I'd be going, hey, why are you trying to be a wise guy and guess not only what the bank does, but then you got to figure out what's the market reaction to it, and you got to fight the algorithms afterwards. British pound in a downtrend, trying to come down, but it's already in oversold territory. I don't look for much more on this break below the 140.90 level, but it's not a sign to go long. That's where I think the shorts are going to be covering. Bitcoin. So as Bitcoin's coming up here and everybody's bearish now, resistance should be the 38,179 level. There's an awful lot of talk about the crossovers of the 200-day average, the 50-day average. I don't have them on this chart. They are in my morning subscriber video, so everything's there for my subscribers. I give you a limited amount of freebies here. In the morning, I really cover everything in detail. In the Brent versus WTI crude, maybe you got too cheap at 240, but the pattern is set. Lower highs, lower lows under the 18-day average. You still have an embedded reading, so these charts have not turned down. And I thought today was a very bad EIA number. Just too much of a build in gasoline and distillates, or was it? You know, the fact that the refinery capacity has jumped so much, and it jumped up nearly 3 points, capacity, that tells me that the refiners are saying we're going to have big demand, let's get our stockpiles ready. WTI crude, still embedded, still looking bullish, upper Bollinger Band targets. Gasoline, still embedded. Lose the embedded reading and I'll turn gears like that. That's how fast it'll be. But you haven't lost it, so I have every reason to stay with the game plan, which is still one of bullishness in those markets. And as you know, I talk to you all the time about things we do. I don't know if you realize we've got a really good group of brokers, the old-fashioned type. You call them and you talk on a telephone. They'll have 20 years plus experience, each one of them. And what they'll be working with you on, if you're interested in talking to somebody to talk ideas, charting ideas. These are the kind of guys you want to bounce ideas off of. And no, they're not expensive. That's nonsense. But not everybody is suited to be a self-directed trader. Remember, in futures, there are no zero commissions that I'm aware of. First of all, the exchanges charge pretty good for what they get. Your quote fees, everything else. It's not like the stock market. Very, very different. But do you need eyes and ears? You want somebody to call you and say, hey, this report came out. This is what it's doing. Here's maybe what Ira's saying. Here's what I'm thinking in the market. And you two work as a team. Sound interesting? Well, if it is, all you need to do is give us a call, 866-973-2077. You can go to our website and our areas there. You'll see broker assisted at the free offerings and ask somebody to call you. They will. You can always write us a memo. We'll do it that way. So any way you want to handle it, I think we got something for you. Please consider it. I'm Ira Epstein. I'll see you tomorrow.